Your 401k, your home value, even your job could all be saved or put into a higher position if the Federal Reserve has to pivot on rates prematurely. You see, the Federal Reserve has made a committed path to staying on higher interest rates until inflation comes down to the 2% target range. They're projecting it's going to take until 2025 for that to be accomplished. That having been said, the Federal Reserve has also made it clear that they're prepared to pivot if push comes to shove and the economy starts to show too much damage, or the downward pressure from the higher interest rates puts too much pressure on the economy and there's systemic issues like a more massive banking crisis, for instance. Your job, your home value, your 401k, your stock portfolio, all of these things are deeply intertwined into the Federal Reserve's policies. If the Federal Reserve has to pivot, let's just say first quarter of 2024, between January or March of 2024, the Federal Reserve decides that the economy is showing too much of a strain or there's other systemic issues going on and it's time to pivot. It's gonna be like a game of musical chairs. The Federal Reserve is basically going to reopen the floodgates for money to flow more freely. It's gonna be access to cheaper capital. And cheaper capital is going to allow corporations and individuals to buy more, to spend more. When they spend more money is going to go into circulation. When more money goes into circulation, things become more valuable because there's more dollars chasing the same goods and services. This is where inflation typically comes from. If the Federal Reserve is forced to pivot prematurely before they can get inflation down, which again would probably be a pretty catastrophic situation, then that pretty much means that the bottom is in on the majority of the prices that we see right now. Now, how does this benefit your job? How does this benefit your 401k and your home values? Well, basically, the first thing is going to be real estate. Real estate, residential in particular, is already at a new bottom. And for most markets, it's at a new bottom. The Federal Reserve starts to pivot prematurely, even if it's a sustained pivot, like a 0.25% rate cut every other meeting. That's still a whole percent down in the course of 2024 if they start in the first quarter of 2024, because there's 8 meetings, so that means there'll be 4 where they cut rates. You have to understand the mortgage rates, are tied to the 10-year treasury, and that's tied to the federal funds rate. So you can have a pretty significant swing in the mortgage rates from the federal funds rate going down, up or down. If the mortgage rates drop, and let's just say I personally, foresee that if the mortgage rates go down between 5.5 and 6, based on the fact that we've been in 7 plus a good bit of the time in the last 6 months or so, that's going to be enough to unlock a lot of buyers. We still have a very significant inventory issue that will not be resolved, as I spoke about 1 million times on this channel. So it's very, very realistic if you already own a home. The Federal Reserve takes a massive pivot in the next, like I said, first quarter of 2024, second quarter of 2024, which is not far from now. That's going to send your home valuation in most markets up significantly. High single digits, possibly double-digit yearly increases in home valuations is highly possible because it's already relatively competitive now. You got to think that there's an inventory issue on a lot of different levels. The next thing is going to be your job. Depending on the industry you work in, the Federal Reserve's interest rate hikes probably hurt that entire industry. Tech is a really good example. Real estate sales, that's another good example. Depending on anything that is, indirectly tied to these different industries is also in this conversation. When they lower interest rates, more activity is going to pick up. More revenue is going to generate for these different companies. They'll have more money to spend and reinvest back into businesses. They can afford labor again. At that point in time, they're not only likely going to be trying to keep their existing employees, but they're going to be probably looking to hire again. At that point in time, you're looking at a situation where you not only have job security, but you'll probably have opportunity at job growth. Your 401k is going to be the same thing. Your 401k is made up of the same companies we're talking about. It's made up of corporations. These corporations get access to more capital at better pricing. They're going to spend more money. They're going to reinvest it back into business. In the process of doing so, this is going to, again, stimulate throughout the economy. More people are going to be buying things. This is going to increase revenue, increase the company's earnings, increase their numbers. Their stock valuations are going to go up. What happens to your portfolio? it starts to go up with the stock valuations on these companies. It's gonna be like musical chairs if the Federal Reserve has to pivot in 2024, and it's gonna have a drastic effect on our lives financially and economically. And I'm telling you right now, you need to be positioning yourself. As I said a million times, and you're gonna hear me say a million times if you continue to watch this channel going forward, you need to have everything in place. If you need to make sure your 401k has been reviewed, which I always recommend should be a semi-annual thing anyway. You need to make sure if you own a home that you're in a great position with that. And if you can, buy more real estate, buy more. And if you also, your job situation, if you're in an industry that has took a lag since the interest rate increases, or, heavens forbid, you've been laid off, whatever the case may be, keep your eyes open. If the Federal Reserve pivots, whatever industry you're working in that was affected by interest rates is going to likely pivot in the other direction. Put yourself in position to get back in the game in that scenario. I'm telling you right now, there's so much more that could be said on this, but I wanted to keep this video reasonably short. A Fed pivot in 2024, especially early 2024, could be massive on the economy, even if it's a tapered pivot, even if it's just a 0.25% here, a 0.25% cut there. It can make a massive difference in your life. You could have a significant boost in your net worth, overnight in your 401k and your home valuation alone. Imagine your 401k going up 10 or 15%. Imagine your home values over the course of 2024 going up 5 or 10%. Very significant, tens of thousands of dollars in, economic power and net worth increase in your pocket. Put yourself in position to get as many assets and access to cheap capital now, or in position to get your hands on cheap capital in the future, because money will get cheaper to borrow again. Put yourself in a proper position. If you have the opportunity to make improvements on your property, these are the kind of things you need to be thinking about, because a Fed pivot is not impossible. It may not be that likely at the moment, but anything could break in the economy tomorrow, and the Federal Reserve has to make adjustments. Wanted to put this on your mind. To all my pioneers, welcome back. To my new viewers, welcome in. You want to learn more about myself in the channel, start in the description section and work your way to the About section of the channel. And of course, subscribe, like, share this with anybody you think that can get value from it. Other than that, I want y'all to comment down below and let me know what you think about a Fed pivot and how it would affect your life. How would it affect your life financially, your economy personally? Drop that in the comment section below. Other than that, stay focused, stay in motion. I'll see y'all soon.